is an updated technical analysis blueprint plan of action on the 0 days to expiration strategy on Spider, the largest component to the S&P 500 here off the 5-minute interval, the day trading game plan for tomorrow, March 10th, 2023. And we're trading spot price 398.32. I mentioned it on the 7th of March 2023, and that this key level 236 fibs retracement coinciding with the primary downtrend line of the neckline off the head and shoulder classic looking bottom, if snapped, would be met with a strong wave of selling, forced liquidation, margin calls, stops to go off, and that's exactly what we got. Once we crack that 236 fibs retracement, nothing but a blast down below. Here we are. We ended up, this is the first trading day. I'll review the very first trading day. Plenty of reactions here. We ended up coming in. We ended up opening up right amongst my 399.16 price, 399.16 price resistance. Ended up back testing it 2 times here. Completely smashed down right here, broke down off a data read. I believe some sort of data came out, dropped, hit my 397.05 price support to the button. Good for a close to 0.6% and a 6-to-1 risk reward ratio. Right here, bull stepped in right to the button, right amongst my key inflection point of support there. Ended up tapping it up, rolling back in, came back out. That was good for 0.6% in gains there. Came back down. We ended up getting rejected right amongst my 399.16 price resistance once again. Backed into the corner. Darn near hit my 399.87 price resistance there, offering an objective short trade entry. And that was good for a almost 8 to 10% stop loss. And like I've mentioned in my previous videos over and over again, you want to start to scale in slightly below your half and or quarter position below that resistance line. And by the time you hit here, put your stops up above that 0.1% stop loss. And you want to get in on that early before sometimes buyers and or long traders will sell a little bit before that touch and or back test into resistance there. Ended up coming right back down. We ended up recovering. Looks like we ended up back testing it one time. Came back, recovered it on a full print. Ended up, you could take an objective long trade entry, back tested 3 times. Bounced right up amongst this key 397.05 price support once again. And jacked up right into the close there. Had an amazing rally right into the close. Call it a 0.5% in gains there. And then today we ended up opening right amongst my key 401.32 price resistance. Back tested it 3 times here, offering an objective short trade entry, and it never looked back here. Ended up having some sort of a key reaction there at my 479 price resistance, an add-on, if not an additional objective short trade entry. Solid 5-minute candle close. Ended up breaking that support zone resistance once again, right amongst my 399.87 price resistance, coinciding with the 205-minute moving average, honing in down below. Rejected. Back tested my key inflection point here of the 399.16 price support, right to the button here. Back tested it again. Back tested it again, and it never looked back there. Completely bouncing right off amongst my 397.69 price support once again. Back tested it again, offer an objective short trade entry, if not add on to your existing position for a leveraged up trade. And then right here's that 236 fibs retracement that I was hyping up in my previous video right there, that it would be met with a strong wave of selling. That's what we got there. 396.14 price support, coinciding with the 236 fibs retracement. Back tested it 3 more times here. Could really leverage up on your trade there. And look at the velocity of these drops here. Just a bunch of stops, margin calls, forced liquidations going off here. Big drops here, big candle close drops here. Where just a velocity of strength in the selling. Went and back tested my 393.63 price resistance right there to the button, and just got slammed hard down here. Ended up recovering right amongst my 391.09 price support. Entire trade was good for 2.68% drop, crash pretty much in one day there. Call it a 20, darn near 30 to 1, 26 to 1 risk reward ratio. That is as good as it gets. Congrats to anyone who caught that. And look at, we ended up bouncing right back up into my key resistance level up again at that 392.56. Got rejected and slammed pretty hard into the close, but just the velocity off of that break right there, and how big these candles started to get right there. That's where the real fear started to set in right there. And just mass selling right after that, panic selling there, almost going down in a complete parabolic state there. But that's pretty much it. That was it for, I'll give you an update of this new chart. This is what I see now. We have a potential positive divergence, RSI divergence now. Big key levels to watch. You got your 390. I truly believe that the 390's got to hold. Some of these, especially right here, that 389.04 price support. Bull traders, long traders want to hold that key inflection point. Once we start taking that out, you're going to start burning off that RSI divergence. Any potential RSI divergence that you had, everything else is skinned out through the moving average convergence and oscillator and stochastics completely already breaking down. But that's what you want to see. You want to see if we ended up coming down maybe extend this positive divergence, our positive RSI divergence, and maybe break out amongst this key wedge here. Once we, that's what bull traders, long traders, want to see a break. Maybe we'll start to coil up into the open tomorrow. Great risk reward ratio for a long trade setup there at 389.04. If the RSI divergence could remain intact there to that 387.22, that'd be your next additional long trade entry for a day trade. And key points to watch there. We got some pretty good resistance amongst that 236 fibs retracement now, coinciding with the 395.14 price support. And then pretty darn good resistance up above that 397.90. So we're right up in there. I really like that trade. I'll kind of zoom in here so you can see the remainder of these new key functioning levels here, and really like that resistance. That's a pretty good resistance right there for a short trade setup if we end up getting there. But I really like that 236 fibs. This needs to be respected. That 393.73, 392.57. Also some key functioning levels and resistance levels to watch out for. But if we start to melt down, start breaking some of these key levels here, that's where long traders and or dip buyers will technically start to be pretty bad in trouble. We have the treasury yields really higher across the curve now, with the belly of the curve on the high. A 2-year 10-year spread completely snapped the 2008 lows, now smashing below a new cycle low of inversion that hasn't even been seen since the 80s, and these are just continued bright red alarm bells that are popping off in the debt markets. And